Well, let's just take stock of the market because we've been handed over some pretty range-bound cues from Wall Street. But other than that, 3 straight days on the trot that you've seen the index falling. So yesterday, 17,600, we did precious little as we were confined to a pretty tight range. And the biggest sore point in the market yesterday continued to remain the IT basket. Metals, they managed to buck the general trend, gaining for 9 straight days on the trot. And we've been talking about a secular trend as well playing out in the pharma space, and that clearly stood out as the Nifty Pharma index in particular held on to the 200 daily moving average. As I said, range bound when it comes to the global screen. That's the SGX Nifty as well, indicating a pretty muted start. Given the fact, Nikunj, that the FIIs as well continue to remain net sellers, although the quantum has reduced, DIIs as well net sellers. What are the critical levels to watch out for, and what does the market do from here on?
I think range bound is the word, and frankly, a range bound movement, range bound setup for global markets and for Indian markets is frankly not a dire outcome. I think it's a great outcome. Markets are taking the time. Markets, there is a wonderful sectoral rotation which is on. Mid and small cap stocks, with each passing day, the confidence to participate there, I guess, is evident. So the bearish narrative which had gripped Wall Street and Dalal Street, that bearish narrative clearly is behind us. Markets are no longer oversold. So to assume that the kind of rally what we've seen in the first week of April in the last 10 days, that is unlikely to continue. The way I see things panning out is that Nifty may just spend some time with a positive bias. The desire to participate in mid and small cap stocks, I think that is evident. The sectoral rotation is benefiting capital goods stocks, select auto stocks, and few banks. IT is in a back burner. So that really seems to be the construct of the market. But directionally, it is looking for a real way to participate in this market. I would say, do not sell. If you bought at low levels, stay invested. And it's time to really treasure hunt in mid and small cap stock. It's not a time that where you want to book profits, whether it is on your trading positions or also in your investment portfolio.
Okay, so the fact that we're range bound, it's not a dire situation. That is a pretty good spot to be in at the current juncture. But earnings, that is the other big talking point in our markets. Day after day, we're being set out with a whole set of numbers. Yesterday, primarily a lot of mid-cap numbers, and that's just really how we're categorizing it. And you can see quite a bit of green on your screen in that report card, and that's largely on the back of the fact that you had healthy revenue growth for ICICI Sec. You've got ICICI Securities as well. That's had a mixed set of numbers. Tata Communications, though, that was rather weak in the fourth quarter, but it seems like maybe the margin pressure is now behind us. So just really assessing the quarterly numbers, and now the big one today, Nikunj, is going to be HCL Technologies.
Let's start with what do we have on the screen, and I'll start with the odd one out. When I say odd one out, Mastech. Strong Q4, healthy revenue visibility. Hello. Strong revenue growth, healthy revenue visibility. Now that is very different from what we've heard from TCS and what Infosys in a sense has indicated. Tata Communication, well, numbers are not that great, but is the worst behind the data business. The stock has seen a sell-off and a big powerful sell-off in the run-up to the numbers. The point I'm trying to bring out here is that not everything in IT is bad and not everything in IT is great. Similarly, at the current juncture, looking at these numbers, is there a trade in IT which is cut your shorts and go long? And I think that trade could be at play. First things first, I think Mastech will bounce back because of these numbers. Tata Com, in my book, it has already fallen. The downside gets restricted. And HCL Tech, I guess, becomes a completely different kettle of fish. So I'm just going to divert a bit here. And let's look at the 52-week change of HCL Tech. Compare that with Infosys. Look at where a TCS has done. And you will actually see a very big divergence there. Divergence in terms of the HCL Tech stock performance, what Infosys has done post numbers in terms of the positioning, and where TCS has moved post that. Now that's HCL Tech for you, down just 5% in the last 52 weeks. For Infosys, the chart is going to look very, very different, largely because of that big fall which happened on Monday. That's HCL Tech and TCS for you, and then we'll throw in TCS also in this just to compare. So the point I'm trying to say here is that it is not about IT, it is about individual companies. And this time around, the expectation of HCL Tech numbers have been quite diluted, even though it has been a ranked outperformer.
Okay, that's the view coming in. Yep, that's what the ET Now poll is expecting, that the dollar revenue growth could be tempered this time around at about $3,220 million. Profits are seen lower by just about 5% at 3,680 crore rupees. The cross-currency revenue growth, that could range from about -2 to about +1%. And we'll also be watching out for the EBIT margin impact on account of the seasonal decline in the high-margin P&P business. But that aside, then the spotlight will also be on Tata Motors within the auto space, as JLR has come out with their long-term plans. Some of the factors that they've highlighted is that they're really going to accelerate their plans in modern luxury electric, and they're going to invest close to £15 billion to upscale their overall business. A slew of brokerages as well have come out with their take on Tata Motors. Macquarie has an overweight rating, Bank of America, well, they say that they have a buy call, and Morgan Stanley as well has an overweight rating with a target price at about 513. How, Nikunj, should the street really read into these plans for a JLR?
Aman, I think for Tata Motors, the worst is behind us, but the best is yet to come. I've been maintaining that for 2023, if you're looking at a dark horse from the auto space, it really could be Tata Motors. What Mahindra and Mahindra did, let's say in 2022 and 2021 and 22, I think you could see that kind of an outperformance by Tata Motors. Variety of factors which are at play. Now we're talking about the press release. So what has come out new in terms of the press release? They're talking about new product launches in the EV space, and they're looking at increasing the capex marginally. But if you're looking at increasing your capex marginally, which means you're looking at spending more, but you're still committing to the fact that you would be looking at a net zero net debt balance sheet in FY25 on an aggregate basis, FY26 for JLR. They're also talking about a double-digit EBITDA going forward, which means they are communicating pretty much what markets want to hear, that the deleverage cycle has started and JLR will be looking at expanding in the EV space, and also margins would expand. The business of Tata Motors is such that operating leverage for a business like Tata Motors would kick in because they've got debt on their balance sheet. So could Tata Motors now be firing full cylinders? A, their domestic business is looking strong. They're number 2 player in the domestic passenger car market. CV is in a natural uptick. JLR business is getting sorted out, and the deleverage cycle has started. So I sincerely feel that after almost like a 1.5 year of no performance, Tata Motors could be the stock to watch. And you know, it's interesting, Avan, if one looks at the Tata Motors stock in the last 5-6 years, this stock in 5-6 years has not given you any kind of a return. Just look at the 5-year return, and I'm pretty, I'm pretty certain about that. In last 5 years, Tata Motors, that's Tata Motors yesterday for you. But last 5 years, Tata Motors as a stock, frankly, has given no returns. 40% in 5 years is nothing actually in my book, and this includes the recent bout of outperformance. So if you take out what they've done in April and let's say in late March, then the stock actually has been flat in last 5 years.
The only thing is, Nikunj, that this sort of pushes their net debt-free guidance, right, by about 7 to 8 months.
Yeah, but they're committing to it. I don't think. See, if you're committing to it, and if you're giving and you speaking out the path to achieving that, which is that the Tata Motor subsidiary is going to go public. They are looking at further deleveraging, EBIT margins for JLR would improve, semiconductor device problem is getting sorted out. I think they would achieve it. What you need to understand is that for a business like Tata Motors, operating leverage is at play. Unlike a lot of the auto companies do not have an operating leverage, this company is a debt. So when operating leverage and financial leverage, they both kick in, then the meaningful repair in the balance sheet will always surprise us.